If you are behind this screen panicking, if you are scared, if you don't know what's about to happen, I get you, I feel you, and I understand you, but I will tell you something who's been in a few dips before. This is normal. The stock market does not just go up. The stock market goes up and it goes down and then it goes back up. On the bright side, the stock market goes significantly more up and to the right than down and to the right. Peter Lynch, you guys should all know who this guy is, has amazing videos. And he said, all you need to know about the stock market is you invest into it the long term. And once or so every single 7 years, there's going to be a dip, something like that. So if you are worried or panicking about the red, it is natural to have that reaction, but it is unwarranted because it is what it is. Zoom out and just look at your account. I'm sure that most of you are still up year to date, probably double digits. The SPY is still up year to date, double digits. A pullback is healthy, it's natural, and I'll tell you, this is not going to be the last time there's a pullback, and it definitely is not the first time that there is a pullback. In this video, I'm going to explain to you, in my opinion, or what I would be doing, is it as it pertains to me just being a buy and hold, an options buyer, or an options seller, and what I would be doing in a red market. And hopefully this resonates with you guys on the other side of this screen. If you're new here, my name is Adam. I retired at the age of 41 years old last year, which makes me 42 years old today. I'm calm as a cucumber. I got about $1.25 million of collateral put out on Meta options, Hood options, and SoFi options. And I'm not really stressing it whatsoever. Last year, I retired based on 3 pillars: multi-baggers, dividend investing, and options premium. A lot of people always say, hey, Adam, I wish I would buy XYZ stock if it pulls back. I'm waiting for a pullback. I laugh at all these people. I smirk at these people, and I think they're a bunch of schmucks because when the price falls back, they never end up buying. Maybe 2% of the people that say, hey, I'm going to buy in the dip, like a massive dip, buy. Why? You have this euphoric feeling when the price goes up, and you think that when the price goes down, you're going to buy that dip. However, when the price goes down, all of a sudden it's doomsday. When Ethereum was pushing closer to 5,000, everybody was waiting for a dip. But now that Ethereum is below 3,000, nobody wants it. Bitcoin was at $125,000. Everyone begged for it to go under 100,000. Now that it's under 100,000, doom and gloom, it's the end of the world. Meta was at $800 when it dropped to under $600. Nobody wants it, but at $800, everybody was lining up to buy it. And I can give you examples like this like crazy because you know of these examples, you think of these examples, and you probably are guilty of thinking like that because that's the way most people think in the stock market, and that's the way most people act in the stock market. While intelligent investors take opportunity to DCA into the dip. Now, I can't tell you when is a good time, when is a bad time, when the dip is going to be over, or when it's an opportunity to be buying or selling. I'm just telling you, be rational. If you're a long-term buyer, look at your account. Your account is probably up. If you have money on the sidelines, take advantage of an opportunity to get into great companies at a good price. You don't have to time the bottom. It's okay to spend more on a company that has a massive dip, even if it dips more in the future, but a good company. Probably you should be staying away from leverage. Probably you should be staying away from 2x funds. Probably you should be staying away from treasury companies, both Bitcoin, Ethereum, Solana's, all of the crypto treasury companies. Again, this is just my views of what you might be wanting to look at in this specific market. But at the end of the day, a dip is natural. It happens. It will happen. And you just need to find the opportunity to pick up shares on the dip. When you pick up shares on the dip, then you could sell covered calls. You could also sell cash secured puts to get in to the dip as an entry position. I'm not going to talk about that, but if you want a video of how to do cash secured puts, just click on this link up above. It's going to talk about the basics. In general, you want to be selling cash secured puts on red days, but you want to be selling covered calls on green days. However, it's the vice versa when you want to roll and manage them. When you want to roll and manage a cash secured put, you want to manage them on a green day. But when you roll and manage a covered call, you want to manage them on red days. So right now we have this dynamic that if you're not in any place, you have a great opportunity to get into cash secured puts. Cash secured put is when you're saying you're willing to buy 100 shares of a certain stock at a certain price at a certain date. And you have an opportunity to manage your covered calls. A covered call says you're willing to sell your shares at a certain price at a certain date. But by managing them, you give yourself time to breathe. So a lot of people were underwater with certain types of plays, with certain types of stocks in my own community. And this gave them an opportunity to roll them. There's this fallacy that people think stocks only go up. I'm never going to get a chance to manage my covered calls. Well, here is your chance to manage. And you know what? A lot of people won't take advantage of it and think that maybe the price is going to dip more and more and more and not take advantage of an opportunity to actually manage your position. Guys, my videos are not monetized. I don't get paid from YouTube. I do have a community. I have a link down below if you guys want to join. If you guys don't like the community for whatever reason within the first 30 days, just email me tumstrpltr@gmail.com and I will fully refund your money. No questions asked. I'm even going to give you a 15% off for the first month. The link is down below. I don't get paid from YouTube. I do have a community that I'm building up of like-minded individuals investing for similar purpose. And that purpose is either to supplement their 9 to 5 or to fund their retirement. I'm lucky enough to be retired. And although I'm losing a shit ton of money like everybody else over the last few weeks, I'm still in a good spot. Calm as a cucumber. I'm not panicking, nothing. This video was for me to kind of give you just a train of thought of if you have money, take the opportunity to get the dip on shares and companies that you like, on assets that you would like to purchase, that you always wanted to purchase. If you have no money on the sidelines, that's okay. Just sit tight, relax, and see what's going to happen. Whether this dip ends tomorrow or the dip ends in a year, the dip will end. Things will go back up. Just chill, relax. If you have collateral available, be it an IOU margin or be it actual cash, you could do cash secured puts. This is an excellent opportunity where everything is really, really down. You're getting in cash secured puts at really good technical analysis indicators. And you could say, hey, I'm willing to buy the shares if it drops even lower, and I'll put up to cash for that. And for that, somebody pays you a premium. Somebody's paying you for that. You could collect money as you wait for the price to go down lower. And if it never happens, that's okay because you collected money. This is if you have money on the sidelines and you're not in current cash secured puts. If you are in current covered calls, take the opportunity to roll them if you were underwater this entire time. In other words, rolling them is when you take your existing contract, you close that, you owe money on it, and the money used to pay for that, you collect from a new contract. So you're closing one contract and opening a new contract, so on and so forth. This video is not to show you an example. This is a train of thought and kind of a bigger video, very important video of a train of thought for people that don't get nervous. Like this stuff happens. It goes up, it goes down. If you are in cash secured puts that are underwater, like myself, keep calm, keep cool, keep collective. You can't do nothing and worrying is not going to help you. Wait until your expiration week. I go 4 weeks out. Friday is when all these options expire. I don't even look at them or manage them until Monday or Tuesday of the last week. That's exactly what I'm going to keep doing. My month ends at 12/5. My like in 2.5 weeks or so. Probably like November 31st or something. That's when I'm going to start looking at it. That Monday or Tuesday of the last week. That's it. There's nothing else you can do in this shitty situation except for keep calm, stick to your principles and within your parameters and do what you got to do within the best case scenario of what you can do. Don't freak out. It doesn't help anybody. When the time comes, I'm going to manage appropriately, and hopefully time, luck, God, and the market is all going to be on my side. And if not, it is what it is. I'll deal with it accordingly. Panicking in advance doesn't help you. Worst case scenario, if I can't roll out of them, if I can't manage them, and I do get assigned, it is what it is. I get assigned. If I'm using IOU collateral, it is what it is. I'll pay margin rates on it. But that's why I sell options on companies that are amazing. So, for example, my options right now are on Hood, SoFi, and Meta. I cannot think of 3 better companies that I wouldn't mind holding if I got assigned. It's not like some crazy company, right? It's a company that's in S&P 500, a staple of S&P 500, and a company that's about to be in the S&P 500. So you got to pick companies you're selling cash secured puts on that you're comfortable with holding. Stay away from leveraged. Stay away from 2x funds. Stay away from treasuries. In my opinion, obviously, this is not financial advice, purely entertainment. And be very careful with a lot of YouTubers that you listen to, including myself. But most of these YouTubers, they're for the clicks. They're like for the likes. They're going to talk about these names that are, have pizzazz because that's what pays the bills. And that's what they're going to talk about. That's why all YouTubers start yapping about the same exact stocks over and over and over again. Just be careful. Guys, so we explained, or I explained my thought process of how to deal with a sea of red. This sea of red can end tomorrow. Maybe it doesn't. Maybe it ends in a year. Worst case scenario, what I think might happen, worst case, the Fed doesn't cut rates. Fed cuts rates, market rallies, Christmas rally, everything's going to be green towards the end of the year. De-risk next year, my personal plan. I started de-risking earlier this year. Worst case scenario, Jerome Powell is going to is leaving the Federal Reserve in May. The next Fed president is definitely going to be lowering rates. And if we have a huge dip, the dip is only going to last around 8 or 9 months. When the Fed starts lowering rates, it's going to take a few months to catch up, and the market should start rallying. I'm not talking about the economy. I'm talking about the market. They're 2 separate things, market and economy. And that's going to be the time they're going to say, wow, I wish I DCA'd or bought when the market was red. That's the time you're going to say, I wish I managed my covered calls when I had an opportunity and I could have rolled them or bought out of them on pennies on the dollar. That's the time you're going to say, damn, I wish I sold cash secured puts because the price went up and I don't have to buy the shares. I just collected premium. Rolling and managing is a hell of a thing. Sure, early assignment is possible, and it seems like more and more people are getting early assigned. I guess maybe I was just lucky in them so far with the early assignments. If you do get early assigned, manage it accordingly. Sell covered calls, wheel strategy it, so on and so forth. Don't jump to conclusions before the conclusions are there. Don't cry over spilled milk. If you're in a position, it is what it is, manage it accordingly. You can't do anything more than that. If you find an opportunity to get in on a good price for a great company, maybe it's time to take advantage of it. If you wanted to start selling options, you never knew how to do a cash secured put, maybe now is the time for you to get into a cash secured put. If you're underwater with a covered call, maybe right now is the time for you to manage that underwater covered call. And guys, don't be greedy. If you have an opportunity, take the opportunity. Guys, thank you very, very much. Watch these 2 videos right here, and I hope I see you guys in the next one. Have a blessed day.